Welcome back, dear learners. Before the ad break, we defined depreciation. And there are two methods that we need to consider when we talk about depreciation. And the first one is what we call the cost price method. It is called the cost price method. Others call it the fixed cost method or the fixed installment method. You find other texts saying the straight line method. With this method, depreciation is calculated on the cost price of the asset each year. So with this method, we consider the cost. What is the cost of the asset? And we use the cost to calculate depreciation. The standard formula used to calculate depreciation is therefore, we consider it the ART, A-R-T. This is an abbreviation. A-R-T stands for the amount that is your cost here. The amount, in this case, this is the cost, times the rate. You'll be given a rate of depreciation. It can be 10%, 15%, or 20%, depending on the question. And then the time, how many months did we have it in the financial year? That would then give you the depreciation amount. And here is our activity that we're going to start off with. And it reads, the financial year end of TMG Traders is 28 February 2022. Bought a delivered van for 300,000 on 1 March 2021. Required, calculate depreciation on 28 February at 20% per annum on cost. So it is important to note that our financial year ends on 28 February. So this is when it ends. And here is when it begins. So we have had this asset for 12 months. And remember, once we are calculating our depreciation, remember the ART. That is your amount times the rate times the time. All right? So that means if I'm to calculate here, I will need the amount, which is 300,000, multiplied by the rate, which is 20%, and the time. We had it from the beginning until the end, so we had it for 12 months. So my depreciation therefore becomes 60,000. That becomes my depreciation using the cost price method. After I have calculated my depreciation, I should be able to record it in the general journal. We're going to record it in the general journal. In the general journal, we'll debit depreciation, all right? Because depreciation is an expense, and remember, expenses have a debit balance. So we debit depreciation, there you see it, 60,000. And we credit accumulated depreciation. So we're going to credit accumulated depreciation, 60,000. When you are done with your general journal, you should then be able to prepare your general ledger. Vehicles are an asset. That means the increase on the debit side, it's a plus, and on the credit, it's a minus. And we are told that we have a delivery vehicle for 300,000, so you find here 300,000 under bank. We have calculated depreciation for this asset, and then we'll come to the debit side. Because depreciation is an expense, then we say accumulated depreciation 60,000 on the debit side. And then we will then credit our accumulated depreciation because it reduces our assets. All right? So we'll credit. Remember, accumulated depreciation increases on the credit side. So we have debited our depreciation with accumulated depreciation. Now to complete double entry, I'll come to my accumulated depreciation and I credit it with depreciation 60,000. Then I have completed my general ledger. It is important that before you do your general ledger, you have to understand your general journal. But of great importance is how to calculate depreciation using the cost price method. Let us now go and do the accounting equation. Again, the accounting equation becomes much easier when you've done your general journal. Let us see then. The account to debit is depreciation. All right, and remember I've told you depreciation is an expense. Therefore, expenses decrease owner's equity, hence you see a minus 60,000 because depreciation is an expense. And the account credit is accumulated depreciation. Accumulated depreciation decreases the value of our assets. Hence you find on my assets, it's a minus 60,000. Depreciation has no effect on my liabilities. Hence you see there is a 0. It is important that once you understand this, continuously practice and do questions that involve the calculation of depreciation using the cost price method. And you have to remember, when you come to the accounting equation, you debit depreciation and it affects owner's equity, decreases because it is an expense. And you credit accumulated depreciation, which decreases our assets. And this has no effect on our liabilities. Dear learners, let's go for an ad break and I'll see you shortly.